Our next speaker is Stephan Karpischek. Stephan is the CEO and co-founder of Etherisc and managing director at Disrupt Consulting. Before that, he was a business analyst for blockchain innovation at UBS. He has more than 20 years of work experience in IT businesses, consulting, and education. Stephan holds a PhD in information management from ETH Zurich and wrote his thesis on mobile applications for the Internet of Things. Welcome, Stephan.
Thank you so much. Hi, everybody. Great to be here. I will be talking about Etherisc. Etherisc is building decentralized insurance on the Ethereum blockchain. And I would like to start with a show of hands. Who of you here has had a bad experience with an insurance company in the last, let's say, 5 to 10 years? Okay, that's even more than I expected, maybe 30 or 40%. So we always half-jokingly, and really only half-jokingly say, insurance, the business model of insurance is not to pay. The amazing thing about this is, if you talk to insurance professionals, they actually agree. Insurance makes much more money if they can reduce the amount of payouts than by increasing their premiums. I brought a few numbers from Germany. Nearly half of all Germans think that insurance is easy to defraud. This amounts to a total damage in insurance fraud, just in Germany alone, of about 4 billion euro per year. I researched a bit the numbers for the US before coming here, and I did not find a reliable source, so I refrained from putting it on the slides, but the numbers are between 40 and 80 billion dollars per year in the US alone. And the crazy thing about this is that most people think that's okay, because the insurance companies, those are the bad guys, and it's okay to defraud them. You remember Hurricane Katrina in 2005? It was a big event, and also in the insurance space, 100 billion of damages. About a third of that was insured. So that was about 36 billion in payouts. How much of that do you think is estimated to be fraud? 20%. 20% of those 36 billion payouts for Hurricane Katrina is estimated to be fraud. So where does this come from? Why is this the case? The main problem with traditional insurance is a misalignment of incentives. In the event when you actually need the insurance to pay, the insurance has a strong commercial incentive not to pay. So the incentives are heavily disaligned. It's an asymmetric relation between you as a customer and the insurance company that you normally expect to pay for your claims. This misalignment drives up cost. Who carries that cost? Who pays for that? The customer. The estimation is that in the US, every one of you pays about $500 to $700 in premiums per year to cover that costs, to cover the additional operational costs, the regulatory costs that are needed to keep this misalignment somehow in balance. Overregulation. Yeah? Insurance is heavily regulated and, as many say, too much regulated. And this drives customer experience down. So that's what you are experiencing. You have a bad experience with insurance nowadays. Now, a bit of a rhetorical question here. Is there any alternative? Can you think of a system which would allow us to realign incentives? Something that would allow us to experiment with new ways of how we can bring transactions together, maybe in a more transparent and reliable and trustful way. Any idea? Yes, I hear it a bit, yeah, okay. So, we have put what we think is the first insurance solution on the blockchain. We presented this in September last year at DEF CON, a large Ethereum developer conference in Shanghai. Flight delay. Flight delay is a very nice use case to demonstrate the benefits of insurance on the blockchain. You interact with a smart contract. I can just walk you through very quickly. You can try this for yourself. It's live, it's online, it's in production. At the moment, we are using the testnet for regulatory purposes. I will come to that later, but it was in production on the mainnet, so you could actually insure your flights and get a real payout out of that. The process is very simple. The user experience is in our opinion, really easy. You select your flight, and so you put in where you're flying from, where to, and the date, and then you select a flight, and you are presented. I know it's pretty small. You might not read it, but basically you're presented a policy. And you can choose how much money you want to transfer to the smart contract. So in this case, we choose 5 Ether. And if the flight would be delayed between 15 and 29 minutes, I would get a payout of 37 Ether. If the flight is cancelled, I would get a payout of 150 Ether. I can apply for that policy. Then MetaMask pops up. We have heard about it. In the back, it's Infura making all this possible. We accept the transaction, we sign the transaction, and we send it to the smart contract. So what happens here is, we are sending a transaction to the smart contract with a small amount of money, like 5 Ether, or actually it's not that small anymore. And with this transaction, we send all the data that the smart contract needs in order to do a fully automated payout. That's the last step. As soon as you click accept here, everything else is taken care of. You send the transaction to the blockchain, it gets mined, and that's the last thing that needs to happen. After that, we don't need to do anything, you don't need to do anything. As soon as your flight is delayed, you get a payout automatically. And that's very good user experience. So when we put this on the blockchain, we considered it an experiment. We did not dare to call it insurance back then, because insurance is a highly regulated business, so we called it a risk-sharing platform. What happened after that, we got a lot of telephone calls from insurance companies, airlines, travel portals, and the reaction of the insurance companies, it was a wide range of reactions. There were a few insurance companies that actually invited us. That's interesting. What exactly are you doing here? Can you explain it to us? We need to learn this, so please come and demonstrate this to us. There were a few companies calling us, that's illegal what you are doing, and you are not allowed to do it, and do you have a license, and we will sue you out of the market, so you better stop it now. So that was an interesting experience. We are working now with the former insurance companies, and we are not working with the others. But there's also one interesting request, if we can do this for other verticals. And we said, absolutely. So one of the companies that we were working together with from London, they asked us, can you do this for weather? Can you use weather data to decide about payouts? And we came up with the model for crop insurance. So if you are a farmer in rural Africa, you have a big problem. You cannot insure against weather damaging your crop. Too little rain, too much rain, this is all damaging for your crop. you cannot insure against it. In most countries, you can't insure against it because it would not be commercially sustainable for an insurance company to offer this as a product at the small premiums that those people can pay. The difference is about a factor 3 to 5. Yeah? So the insurance company to offer this as a product would need $15 per month to make it attractive for them. The farmer can pay between $3 and $5. With this model, we can lower the operational costs to enable this market. And that's a huge game changer. We are currently working with a small company in Senegal to try to push this into the market there and work with the regulators to get a license for that. And if we succeed at this will change a lot. So how does it work? Very shortly, a high-level architecture overview. We have the smart contract in the center. We have actually modularized our smart contract system. So in fact, it's now 7 contracts that are orchestrated and working together. On the left, we have an oracle. We are using Oraclize. They have supported us from the very beginning and are doing a great job as a service to interact with the data provider, which is in our case, in the case of flight delay, it's flightstats.com. It's a commercial service. They provide an API. We send, the smart contract sends the flight number and the date of the flight there, and we get back the probabilities of this flight being delayed. And then we have a user interface, which is a normal web app, and we were lucky enough to have a very good timing when MetaMask came out, powered by Infura. We were one of the first apps to use that. So we got a lot of good feedback on this. Yeah? It is, and actually it's usable, it solves a real business problem, and we can show the benefits of blockchain. Our vision is to generalize this and to create a platform and a standard protocol for insurance on the Ethereum blockchain. We think that it will help insurance applications to become highly automated. Insurance calls this parametric insurance. And we believe it will become much more standardized and interoperable, very transparent, very trustworthy, easy to audit. Everybody can check the liquidity in those smart contracts. So is the smart contract able to pay out or not? It's a big issue with insurance in the traditional sense. And our idea, our vision is that we put the whole value chain of insurance on the blockchain. From the customer-facing side to the investor who actually puts money in to capitalize the risk pools. And that's also what we built in a hackathon last year, Hack Ether Camp. We put together a white paper with a token model so that investors can buy tokens to capitalize the risk pools, the insurance risk pools, and get a small revenue in return. So we just discussed this before, whether or not this is attractive for investors in crypto space at the moment. But we think in the end this will become very attractive to diversify investments. So we have got a lot of acknowledgement for that. I don't want to brag too much about it. But just recently we won the Blockchain Oscar for being the most innovative blockchain startup. And we have won a few interesting partnerships with very large organizations and companies. We will announce this very soon. And just today, earlier today, Europe is already going to sleep. We were accepted into a large insurtech accelerator in Munich. So that's good news. We think that, to summarize this a bit, we can realign the incentives between the customers and the insurance. And of course, there are a lot of big challenges. So we are facing legal challenges, we are facing regulatory challenges, and of course we want to build a product and offer a service which is actually attractive to customers. On the legal side, what is it that you are actually dealing with? Who is the insurance in that sense if you have a smart contract you are interacting with? Can you sue a smart contract? Can you sue the guys that put the smart contract on the blockchain? It's an interesting question. Ask a lawyer. So we have asked a few lawyers, and we get a lot of different answers, or no answer at all. Yeah. So at the moment, a smart contract is not a legal entity. Maybe it will happen sometime that smart contracts will be considered a legal entity. Regulatory. Is this, we have a clear goal. We want to become the first fully regulated and licensed insurance on the blockchain. So we are not interested in moving around regulation. And we are talking to a lot of regulators, actually 4 regulators in 4 different jurisdictions. And we are educating them. And they are eager to learn and understand how this will change. And one of the interesting things that we see is that we are moving from what we call ex post regulation to an ex ante regulation. Regulation so far works like this, that at the end of the business year, the regulator gets all the books from insurance and looks at those and thinks, okay, is this good or not? Have you done everything correctly or not? And what we can do with a smart contract-based system, we can present the smart contracts to the regulator. Of course, they need to understand code, and they need to be able to read code, and ask them, is it okay to deploy the smart contract and offer the insurance service then? And this changes the role of the regulator, and it changes the moment when the actual regulatory activity happens. Ex ante regulation. Who of you has Bitcoins in his pocket right now, or any other cryptocurrency? You are not representative. So if you go out there, it's a lot less. So what do we need to make this adopted by a larger mass of users? We need something like fiat bridges, and we are working on those. And we think as soon as we can have fiat money on the blockchain in tokens, we can enable a whole many new markets and many new business models. So, in total, we think it's a worthwhile goal to go for insurance on the blockchain. And our roadmap, very shortly, we are still ramping up funding. We are very early, so we started this in September last year. And we are working on the operational model together with a large auditor, working towards regulatory safety. As I said, we want to be a fully licensed insurance business on the blockchain. And we recently applied for the Enterprise Ethereum Alliance too. In 2018, we want to have the first insurance license and want to be able to offer insurance services operating fully on the Ethereum blockchain. And then we want to develop this further into an open platform and into a de facto standard protocol for insurance. Thank you very much. I think, do we have time for a few questions? Please. Please, go ahead. Yes, exactly. So the question is, how do we quantify risks? For the flight delay insurance, it's pretty straightforward. Yeah? We look at the historic data, and we can estimate the probability of a particular flight being delayed, and then we create a zero-sum game out of it. For the weather-based insurance, it's a bit more complicated, and we need to work with assumptions. But in the end, it's a risk model, just like any actuary in insurance would do it. Does this answer your question? Please. We are not worried because that's actually happening, and it's. But in the end, what makes the flight delay case different from gambling is when we check for the ticket. So as soon as we check, do you actually have a ticket for this particular flight? It stops being gambling. Yeah. If we don't check for the ticket, which we did in the first deployment, then you're right. It's a gambling platform, but it's actually not that big of an issue. Yeah, so we can deal with that. Yes. So at the moment, not at all. Yeah. But if this evolves, yeah, of course we need to or the smart contract needs to reinvest the premiums. Yeah. At the moment, we don't do that. Please.
Could you explain the Oracle mechanism just a little bit more deeply? As I understand it, the Oracle has to write a transaction to the blockchain so that all the nodes calculated in the same way, but if everybody has that written, that would be very expensive.
No, we just ask the Oracle for the insured flights, so we don't care about all the others. Basically, 15 minutes or so, or 20 minutes after the flight was scheduled to land, the smart contract issues a transaction and pulls in the data from the Oracle. Yeah, that's right. With a server issues the transaction. Yeah. Again, please. Yeah, that's a very good question. So we are working at the moment. We are working with very simple risk models. Yeah, so because we need to store it in the smart contract. But in the end, we can also offload this to off-chain computation and have more complex risk models. In the end, from a regulatory perspective, we don't even need to know that. So we just need to know you have to tick a checkbox and declare that you own a ticket. That's right. The regulator is happy with that, so we don't inquire any further. In the end, we would like to use an identity system like UPort. We have actually integrated with UPort already for other use cases. Any more questions? If not, then I'm happy to answer questions in the breakout sessions afterwards. Thank you very much.